General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. It's the midweek. 5/13/26. Anchor. What is the anchor point for the week? It could be Monday. Let's look at the hour. We almost at 29.5. This Tuesday looks legit, and look how we came back to retest this expansion. So this is the last expansion. We kind of got an inversion here. And something like this. This looks like the anchor. And this looks like the anchor is confirmed right here. Looks like S&P took care of this, so we didn't have to. Tuesday, low of the week, seems locked in. With CPI behind us. Bonds template. Yeah, we have to adjust. We got to take into account we just took this high. So, $29.6. We'll do this suspension justice. We're pretty much at 29.5 right now. retest that. Today's low. Wednesday low holds 29, 29.6. Seems logical. Alright, shifting framework, get ready. Let me say, it's been shifts in the framework, hit rate. It's been a lot of not really. We're not sweeping both sides of Asia. We're not getting those classic profiles. Even yesterday wasn't classic. I haven't had a classic dating profile. Week it seems. Lots of gap and go days or one-sided days. Case study, high quality on the stage. Case study is patience. Nasdaq handing out masterclasses. Time and bias alignment. We're in options expiry, so this is week 3 of the monthly cycle. Week 2 is still holding this week for options expiring. No retracement this month. Week 2 premium quadrants supporting higher prices. Expansion mitigation signals. Nice retracement yesterday on CPI, but today is balancing out that delivery. Decision quality, high probability, low probability. Getting chopped up. And on the wrong side market, looking for sales. Narrative framework and accuracy. Price is starting to smooth out. And become easier to read. Still choppy, but usually it's when overnight is large range. success plus failure. Um, Successfully managing the risk, failure getting impatient and FOMOing into trades so I don't miss it. Is this not a word? Case study vault reference 9. Okay. File 13. Today we can classify as suspension. We took some highs, took 2-day high. It's engaged day. Medium confidence. Conditions confirmed. Everything's checked. Tuesday now. And expansion's playing out. We know we just got bullish targets today. It's NASDAQ. Okay. New York retrace, but did not, but didn't. Occasional low. Price traded higher. Okay. I'm confused. Oh, okay, I hit the wrong button. Alright. Inversion showing up for work. Tuesday breaker showing up. And 29.6 seems logical. $29.6 seems logical now that Monday flip. Like now that Monday range is flipped. Let's go here. This range is still key. Seeing this. It's the first range we got both sides swept. We put a green line here so I can see, and this will be validated as an order block if we retrace. if we bounce off the daily order block. Okay, SPX. A little better retracement, but still high prices. And it looks like it's leading now. Close higher in Nasdaq. So with the heavier indexes or index being stronger, that shows it's not just tech. It's not just tech. Cushion the market or Nasdaq will be higher. Stronger. Let's go here. Let me take this off. Monday has officially been flipped. 7,500 on the menu. And Tuesday was respected. Key level here. Let's go here. See if we got a breakaway gap. No, we don't. So it's way stronger. We got a breakaway gap taking that high. Flat bottom left unchecked. Breakaway gap. Seems like the value fine. Close of this FEG can't be used as inversion for sales. Here on the daily. So here's the last good stop line. Was this Tuesday? Yeah. It's a Tuesday low of the week vibes. Also this up candle. Open price. Look at it on a daily. Yeah, what's amazing is what we did from the screen on SPY. So that's news failure date. Get this on the daily. Mm-hmm. Mm-hmm. It's 30 minutes. Mm-hmm. Nice push up. Seems like it will trace it go higher. Seems no news. It's pushing. Price to the outside. Alright. It's the KQQQ. Just took Monday's high here. Took Monday high. And flat. Seems like a stop hunt. Not true directional move. Okay. Let's look at NVIDIA. NVIDIA made new all-time highs, which is pushing the market up. Okay. New all-time highs on NVIDIA. No rest. The market's struggling. NVIDIA made new highs. Today was an engagement day. Just took too many trades. I told myself a lot of lies today. Oh, I would do a drill. I should be able to do this. This is worth the risk. This is a prime example of execution drift for when you take your eyes off of probability in the big picture and you look at the now as if it's the present. Then that drift of focus led to a drift in performance. It's very true. Did the framework play out? Yes. No, housing for sales. Bigger sales. I learned about pattern narrative for myself. watch for tomorrow. I don't think it's no big news tomorrow. Today was PPI. There's no earnings. Retail sales. And looking at the news for Trump. That's the only thing that's moving the market right now. All right, that's that on that. Y'all have a good day. Peace.